Hey everyone, it's Christopher Mullen from the goldanoilguy.com. I want to just cover a couple interesting little topics here. Over the years, I've taken a lot of different courses and worked with a lot of different trading professionals, and everybody's got their own way of attacking the market and what leads the market and how you can identify trends or reversals. And I just want to touch on a quick topic that if anybody's read the book from Stan Weinstein about profiting in a bull and bear market, he talks about how what GM does, whatever way GM is moving is how the market is going to follow. So he follows GM as kind of the big, broad stock of the overall economy. Now, I've worked with other traders. Some of them say you could follow Goldman Sachs, GS, and other ones say whatever Exxon Mobile is doing, you've got to expect the broad market to follow suit. So I just want to cover on that real quick. Taking a look at the chart here, this is a daily chart of the SP 500. We're zoomed back a couple years, and I've got 150-day moving average overlaid on here. Now, we've seen we had a big consolidation here and a market correction. We had a couple minor market corrections, and then we've seen the market take off to the upside here. Now, overall, looking at this little stochastics indicator, we can see here that whenever we get a new low, we've had a strong run up in price. Whenever we start to see a previous low broken on the stochastics, usually it's an early warning sign that the market is going to go into a little bit of a correction. We had the same thing over here. We started to see a break of a low, and that happened over here. It usually happens a week or two before, or even up to a month before the market really rolls over. Now, what we're seeing over here is similar action. We've seen it, the stochastics up in the upper end of the range here for quite some time. We've had a couple key pivot lows here, which have been broken on this last pullback. And more or less, we've had a bounce back up, and now we're looking a little bit overbought. Now, what I want to quickly cover on here is flip to, if we just take a look at GM here, GM looks like it's forming a topping pattern. Now, if anybody follows Stan Weinstein's strategy, you've got this stage 1 basing pattern, then you've got the stage 2 accumulation mode, and then eventually you realize that it's turning into a distribution top, a stage 3, and then you're going to end up having the decline stage 4 coming back down. It looks as though GM is heading into a stage 4 decline. And if we take a look at Goldman Sachs, you can see here it's starting to become choppy. It's at a previous high where a lot of volume has traded, and it's starting to form somewhat of this a similar price action, possible head and shoulders. It's trading sideways. The 150-day moving average is now going flat, and we've actually got the cycle moving below, dip below the 50% mark. It's had a little bit of a bounce. Once it breaks the stochastic breaks the 50 level, usually that's when a downtrend is actually starting. So let's just get fancy and actually blend these two symbols together. Doing a little calculation, you go GM plus Goldman Sachs divided by 2. So this combines the two share prices. And you can see here we've got a pretty clear line of what's going on in the market. We can see we've got this rising neckline. Overall, these two stocks have yet to fully break down and show a downward move in the broad market. So if we're using those two stocks as a strategy, that when they break down, the broad market has topped and it is going to follow suit. Now we can also add in the third one. We can add in Exxon Mobile, XOM, and of course divide that by 3. And you can see we're still a little bit further away from the neckline here, but overall you still get the same pattern going forward. You get this basing stage, you get the advance, and then we've got this, the more stocks you blend into it, the smaller the range, but we've got this possible distribution top forming, and of course you end up using a neckline, a trend line to get in earlier. So if we do get a break of that trend line, eventually we're going to see price come down and then really give way and sell off and go into a broad market sell-off. So looking at the main charts here, it looks as though more or less the stochastic cycle is starting to turn down, and we're starting to see the broad market go into a distribution top phase, and eventually in the next few weeks or even possibly a couple months, as the broad market tries to top out, we'll eventually see a clearer top and a breakdown in the SP 500 and the Dow, and we'll see a big move to the downside. So I do feel as though we're coming into a distribution top for the market, and we're going to see some type of market correction of a 10 to 20% on the SP 500. Anyway, just wanted to kind of bring that up to show how those major stocks can kind of give a little bit of a leading indicator of where we're trading in the overall broad market. Anyways, hope that helps. Talk to you later. Bye-bye.